Hi, I'm Stephanie Fix with Remax Professionals here in the Denver metro market. Mortgage rates have moved higher again, and that's creating a lot of questions for buyers and sellers right now. In this video, I'm going to walk you through what this recent rate jump really means for our spring housing market. What's important to understand first is that the Denver market actually got off to a very strong start beginning in January. Showing activity was improving, buyer confidence was returning, and well positioned homes were beginning to attract multiple offers again. There was real momentum building as we moved toward the spring season. Now, rates have recently jumped due to inflation concerns tied to rising energy prices and global uncertainty. But here's an important perspective. Mortgage rates today are still lower than they were during the spring market last year in 2025. And historically speaking, today's interest rates are still within the long term average range we've seen over decades. We also saw earlier this year that when mortgage rates briefly dropped below 6% at the end of February, buyer activity picked up quickly. That tells us how sensitive housing demand can be to financing cost. There is also some positive news for entry level buyers. Home prices softened slightly over the past year in many segments. So, while interest rates have moved higher recently, improved pricing has helped affordability compared to where we were before. To determine the direction of the Denver market this spring, there are three key indicators I'll be tracking very closely. First, pending home sales. This tells us whether buyers are still stepping forward with confidence. Second, days on market. If homes begin sitting longer, that can signal shifting buyer psychology. And third, something many consumers don't watch, Treasury yields. As long as the 10-year Treasury yield stays relatively contained, housing demand can remain intact. Economists are also emphasizing that housing is highly rate dependent. If mortgage rates stay roughly in the low 6% range, the market can continue to grow. The real risk isn't short term headlines, it's a sustained spike in borrowing cost. So, while mortgage rates have recently moved higher, the Denver spring market still has meaningful momentum and rates remain lower than they were a year ago. The key right now is not reacting emotionally to news cycles, but understanding how real time market signals are impacting demand in your specific neighborhood and price range. If you're thinking about buying or selling this year, I'd be happy to share what the latest data is really showing. And if you'd like to stay informed on Denver market signals before they become headlines, be sure to subscribe.